Okay, this I'm going to use as an example. I'm on Neo, going to earlier in the year. This is the daily chart. I'm going to add in the Ichimoku cloud. When the stock is above the cloud, that means an uptrend. This purple line is called a lagging line. And basically, the farther the candlesticks are away from the cloud, the bigger the trend and the more supportive of that trend. Let me add the MA. I have 25. Let me see. I have 25, 50. The orange is 75. The light blue is 100. Dark blue is 150, and the 200 MA is white. So it's first going to hit that red 25 MA and follow along. Once it breaks that, it's going to hit that 50 MA. Then after that, it's going to hit the 75, the 100, the 150, then the 200 is you get out. Which is why so many people were getting out after it broke this 25 MA here. Now let's go to the 4 hour. So here's the different trends. So they go up like this. You have your little run, and then they consolidate and dip to the cloud. And then that starts a new trend. It's picking up right under that 50 MA line, or right at the 50 MA line every time. If it goes, sometimes they'll push it right under the 50 MA just to get people out. Then it'll follow up again, then makes the new trend. Now we're at the 50. Once it busts through that 50, people get out. Now we're busting through the cloud. So then when it's the red cloud, that means a downtrend, which means you can take short-term trades. They're usually like a couple days, like little swing trades. And the purple lagging line will be under this red cloud. Once it starts picking back up and you bust through the downtrending cloud, you get into a new uptrend. And then it's back again. Red to the 50 MA, then the 75. Now it's going to hit this 100. Once it hits the 150, and which is exactly where it has support, right here. That's the support. It's going to hit that mark and then go up through this downtrend cloud and make a new trend. But since this has been going like for a while, and also with the MACD, when it switches right here, the closer it is to like %000, that's going to be a longer uptrend. And then it dips. And then that's when the trend stops and it's going down. Let's see what else. I'm going to pull up the RSI here. Okay, so here's the same thing. The RSI is hitting under 30. Boom. There it goes. You follow the uptrends. Boom, 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 boom. And then the downtrends. Downtrends. Boom, 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 boom. And then once it hits this, like 33% right here, boom, whole nother uptrend. That's the sweet spot. The DMA is also really good about this too. When like the light purple blue right here crosses up over the like brownish orange color, that's an uptrend signal. when it crosses down, that's a downwards trend. Same thing with the MACD between red and green. And then this one is a little more interesting, but basically what you're looking for, a trend right here. The yellow is going to go up, the purple is going to go up, and the blue is going to go down. So right now, this is a bad time to buy. But I also look at the AO, and when it's up above 0, that means it's buying up more volume. When it's red going down, it's losing volume. When it's underneath that, it's lost a lot of volume. But when it gets to that second half of the triangle, that's when people start buying into a new uptrend. Now you can watch the replay of the day on WEBULL. I'll make it go faster. This is 9:50 in the morning. The MACD had a crossover, we got a new trend, and then it crossed back down, so we're going down. Crossover, so we're going to go up for a new. But see, the closer we are to that 1% on the MACD, if we're still under that 0.00%, it's only going to be a short uptrend until we start getting closer to that 0.0. That's when we can go above. Let's see here. Try this. This one. Damn it. Try that. Here's pretty much, I think that was like the first day of the year. Huge uptrend. Then crossover. I mean, we do this pretty much every 30 minutes to an hour. And it'll just go up and down and up and down. But the first 45 minutes of the day are the most important, and the last 45 minutes of the day are the most important. Other than that, it's just like random traders in between there. Now, here's JAGX on the 4-hour chart. This is where we're at. We're coming down to the 150 line before we can go into a new uptrend. This was the whole trend that started back in December. We popped up through the cloud and then followed along to the 25 or the 50 MA, right around there in the consolidation. Pop back up to the 25 to the 50, and then that's when we started booking down underneath through the cloud. And you're supposed to not trade within the cloud, because that means it's pretty much 50-50 chance of it either going up or down. So now we're going down under the cloud, so now we're in a short-term downtrend, and we'll either come here. I'm hoping not the 200 MA, but that'd be scary. Let's go to the hour. So look at that huge ass trend we had. So pretty much when the cloud comes up, it'll look like that. I wonder if I can do the time chart. Yeah, because you see here, it hits this 200 MA, and then that's when it jumps up through the cloud to start a new trend. When it finally starts busting through the trend, it's going to hit back at that 200 MA and bust through again. See, on the hour chart, it just comes to the next MA line. Like, this will come to the 75. And it'll come here. And if it busts through that, it's going to drop down to the 200 before jumping through the cloud, making another trend here. But let's see here, the white and the 150, they changed. So now the white is above the 150, which means it's on a downtrend. It's going underneath the cloud. And once it hits here, and if you look at the MACD, it's getting close to crossing back over within, I'd say, by noon. That's when it'll go in a new trend. So it'll be an after hours runner. And see, now on the 30-minute, it'll go up the first 30 minutes for like the first, couple hours. And then it'll come down. Because if you look at each MACD, it'll go by, 30 minutes. And those are like, what? Depending on the trend, they can go a couple hours, an hour. Just a little bit. That's why I look at the 1 and the 4-hour charts are the best ways to base off of a really good trend. With penny stocks, it's a little harder